All right. Hello again, everybody. This is Kevin Gormley with Leading Edge Financial Planning. And today we have Cecil Scarbrough here. And Cecil and I have known each other for, I don't know how many years now, Cecil, but we used to work together when we were in the pharmaceutical arena way back when my hair was more Cecil's color. And anyway, we were drug reps. That's what they called us at that time. And now Cecil has started his own company. And today we're really going to try to educate our pilot base on insurance and the different things that people don't want to lose their stuff, Cecil. They work really hard for it. So with that, if you
Absolutely.
could just introduce your company and what your mission of your company is.
Absolutely. So our mission is helping people do exactly what you just said. Keep the things they've worked really hard for, be insured properly, be able to go to bed at night and rest easy that they're covered if something were to happen that they didn't see coming. And then take care of their assets, take care of their families, and make sure they're protected financially. I work in 20 plus states across the country. Everybody that I work with is a high net worth owner of a business. So we work exclusively on an upper end tier. And then I've got quite a few accounts locally with physicians here in Knoxville. But yeah, everybody we're dealing with are people that have risks that they probably don't understand or didn't until we were working with them. Look forward to maybe getting an opportunity to help some of your clients in the future.
Absolutely. Yeah, well, that's great. Thank you. Thank you, Cecil. So I've kind of broken things out for us with the homeowners insurance, then auto insurance, throw umbrella on top of that. And then we would like to talk about life insurance as well. So those are the major areas that we're going to cover. And probably something else will come up. We talked about pilots sometimes have their own plane, like to fly, have certain risks and stuff like that. But at a highest level, before we get into those types of insurance, there's a concept called insurable risk. And, when I first got into financial planning, I didn't know what the heck that was. I just thought, hey, people should buy insurance. Why should they buy insurance? I'm like, I don't know. It's just you should have insurance. So what's an insurable risk, Cecil, and why should our clients care about discovering sometimes what their insurable risks might be?
Insurable risks are going to be things that you own, and that's what qualifies it as an insurable risk. You have to have a stake in the risk. Same with life insurance. I actually can buy life insurance on you if you and I are partners and something were to happen to you and it could affect me. I could actually buy life insurance on you. But if I don't know you, I can't buy an insurance policy on you.
Yeah,
So
that would be a little creepy, and I'd also be worried because Cecil is a big fella and he knows some really big fellas. So I would not
it's
want him buying insurance on my life, that's for sure.
yeah. So when you're looking at insurable risk, that's probably the simplest way to look at it is if you were to have something at a loss, if you were involved with it, there's probably some type of insurance you could buy for that.
Right, right. And the reason I bring up insurable risks, Cecil, is like, we've had clients before that become new clients with us, and we go through the insurance part of our discussion, and they say, "Oh, we need life insurance." And they just retired, they're 65, and I'm like, "Why do you think you need life insurance?" And they'll say, "Well, I've heard that we should have life insurance." And so, we go through and we say, "Well, if you die, what happens?" And they're like, "Oh, we have plenty of money." There, nothing happens. It would suck if one of us
Yeah.
died, but that's about it. And
Right.
so that's the reason why I think for our pilots to think about, like, what are the things if something does happen or go wrong, what are the things that you could lose? And that's really where the terminology, to me, insurable risk becomes so important for people. What do you think about that?
So on the life insurance, your scenario there at age 65, your financial risk on one side of the spectrum drops.
Right.
Your expenses, the things that you got to worry about. Most people's homes are paid for. All those risks have hopefully have slid off the table and they're not there. But if you're a 40-year-old, 45-year-old business owner, pilot, you probably have a mortgage, you have children, you could have, like me, private school tuition or college tuitions that you're going to pay for, weddings, or you might still be, looking at having other children. So
Right.
there's a lot of insurable risk and things to be concerned about at that point. When you're looking at life insurance, typically 30 to 50-year-olds are the ones that really need it at that point. As you get older, if you've been working with a good financial advisor, probably at age 60 or 65, it's not as necessary. If you have a policy in place, you wouldn't get rid of it.
Right.
but it probably wouldn't be something you'd be going to look for. The only time that I've seen, I shouldn't say that people don't do it, but at 65, I took my father-in-law's policies that he'd had for 20 years, and it was a $400,000 face value. We redid the whole policy. His premium didn't change, and created a $1.5 million policy off of the $400,000 policy. So that made sense to do. But
Yeah.
typically you don't see that very often.
Right, right. Well, yeah, no, thank you for that. So let's talk about the home. The American dream to buy a home. And since I own a home, I still think it's a dream, but sometimes it gets kind of painful to own a home. But one of the first
Correct.
things you learn is that if you're going to get a mortgage, you must have insurance. If you're not going to get a mortgage, you should still have insurance. You don't want to
Yes.
lose one of your biggest assets. So talk a little to us a little bit about like what should our pilots know? Like break it down to the most important things that somebody should know about their home insurance.
So currently, the top things to worry about would be if you've been with the same insurance company for a long time, what is your house valued at in the policy you currently have? If you're worrying about insurance premiums versus replacement cost, you flip the equation. We'll get houses that come in that are 1.5 million and they're insured for 700,000.
Yeah, let
Uh,
me jump on this one and just
yeah,
make a comment, Cecil. So my friend Steve calls me one day and he's like, Kevin, how much would it cost for you to have your house rebuilt? I was like, I don't know. He's like, you got to check how much insurance you have because I just found out that it cost a blank ton of money to have my house rebuilt. And so that's what you're saying really is it's
yeah,
not just the value of the house. How much would it cost to rebuild it if you have some type of damage?
yeah. Currently in like Knoxville, for a standard home and a standard subdivision, you're going to pay $200 to $250 a square foot. 5 years ago, it was 125.
Right.
So if your insurance company hasn't caught up, I'm not going to throw other guys under the bus, but most agents aren't actively going out to increase the values because then they got to have the uncomfortable conversation that your premium went up and they
Right.
feel like they'll lose you. So you got to actively participate in that process each year just to kind of look at it and see.
Right.
So that would be number one. Number two, do you have replacement cost on your house or is it ACV? ACV is actual cash value, which sounds really great, except actual cash value takes in depreciation value. So if
Mhm.
you've got for instance, if you got a roof that was put on, it was a 30-year shingle and you're 20 years into that, well, they're only going to pay you a third of what it would cost to replace that roof. And a lot of carriers went to that. They were on replacement value. They just sent out a nice little form letter that said ACV, actual cash value, and the typical homeowner doesn't know the difference. So they think they still have the same coverage they had 2 years ago. That would be the second thing I would look at.
Right.
The third thing I would look at to kind of keep it tight would be, do you have an umbrella? And your umbrella is important because you have minimal liability coverage and the umbrella goes over top of that. So if somebody slips and falls and gets hurt at your house, you've got coverage for it. And there's most states, weirdly enough, you could have your house broken into. They could blow out a knee running through the front yard, getting away, and then they can sue you for getting hurt on your property, which I find very
Yeah.
disturbing, but it's a reality.
What a country. Yeah,
Yeah.
absolutely. Yeah, it's crazy.
So, but those are the three things I would be concerned about is maximizing my liability coverage at my home. Do you have replacement value or ACV value on it? And then where's the value on my property? Has it
Right.
been updated? Is it correct?
I've been there where all you care about is your premium. You meet
Yeah.
with your insurance person at the end, you get the price. You didn't hear anything else they said. At least that was the when I was young. And now actually having been through a few claims and stuff like that, it is actually nice when you call the company and they call you back and you actually get help with that kind of stuff. So really what I hear you saying is that, it's not just about price. You really want to make sure you have the insurance you need because you don't want to use it, but once in a while you'll have to. And then you'll become an insurance expert at that point, right, Cecil?
Yes. And the big thing is it seems like it's something you can control
Right.
as far as the premium. And it's just to us and our clients, that's not the route we want to go. We want to go and make sure we're asking all the relative questions about lifestyle, home, So we can make sure you're properly insured.
Right.
We want to do it as inexpensively as possible, and we look at multiple carriers to make sure we're offering that. It really comes down to do you want your experience to be when you have that claim?
Right.
And that's really the cost of it is if you want a good experience at that point, then making sure you got the right company is the most important thing.
Right, absolutely. So we're going to skip going down the umbrella for now, just because
Absolutely.
I really do want to come back to that and with multiple questions. But tell us a little bit about different states that you work in, different costs of insurance. I mean, and this might just be a personal interest, but a lot of our clients, they're all from all over the country, Cecil, and people in Florida talk very differently about insuring their homes versus people in Tennessee, for example. So
Right.
what kind of things are you seeing overall across the nation? Anything extraordinary in one state or another, or anything to think about there?
It is something to consider when you are moving. If you're going from Tennessee to Florida, you're going to be shocked. Even Tennessee to Georgia, it's a last minute. You've already made all the decisions. You call to get insurance, and you're like, "Whoa, wait a second." It's not going to keep you from moving, most likely, but it is
Sure.
going to be a little bit of a shock. Georgia and Florida are going to be twice as high as Tennessee.
Right.
You go into Florida, there's only limited carriers there as well. You're going to have wind hail exclusions or wind hail deductibles. They're starting to show up actually in Tennessee now as well with all the storm activity we've had.
Yeah, I got a new
Uh,
roof. Thanks
yeah.
to the hail. So yeah, absolutely. No, I really
2012,
did.
right?
Yep. That's it.
2012.
Yep.
Yeah. When you're moving, you're going to have to be a little flexible in knowing that each state is regulated separately for home and auto.
Hmm.
So even State Farm or any of the big names that you would know off the top of your head, it's a different policy in each individual state.
Right.
They only offer certain things in each state. There'll be a lot of similarities, but there is some definite differences between each one. In the state of Florida, it's a no fault state. So if you're in a car wreck in Florida, your insurance pays for your car and their insurance pays for their car. There is no, they're taking care of everything. So those are some differences you'll see in some states. But insurance cost does vary dramatically from state to state to state based on the risks. If, for instance, if you move to Tennessee and you want to live in the mountains,
Hmm.
if you're so many miles away from a fire station, or if you can't see your house from the road, all those things are going to limit who will insure that property, and your rates will be a little bit higher.
Right. So I think the takeaway here is if you're going to move, it's a good idea to at least check in. And Cecil, as mentioned prior, is licensed in many of the states around the United States. So a lot of our pilots do change airport when they upgrade. That happens quite a bit. It's just a good idea because really you don't know what your cash flow is going to be with interest, principal, escrow, or the insurance part of this is all
Right.
very important. So that's
Yeah.
really good to know. Anything else about homeowners before we move over to auto, and we're going to mix umbrella in with all of this, but any other comments around home that we didn't talk about?
The only thing I would say on the home, it's kind of like if any of y'all have ever built a house and you put it out for bid, there's always one guy that's really, really inexpensive and one guy that's really, really expensive, and then a couple that are in the middle. Usually the ones in the middle are the ones you'll end up with. The cheap one, he's willing to do whatever to try to get a job and probably doesn't know what he's doing. The most expensive one, they're probably the best at their craft, but they're not trying to buy your business. Insurance can be similar to that at times. So you got to be careful. If you just get some ridiculous price offered to you, you got to look to see what the coverages are that they've eliminated. And you want to make sure you have water backup. You want to make sure you have utility service coverage. Those are little things that are inexpensive that you want to make sure you have add-ons. But really look at the policy like you're getting ready to take off on a flight and you've got your checklist, and just make
Okay.
sure you go through and see, okay, I don't want to go airborne without all these things working. It's the same with your insurance. You want to make sure you've got everything in line before you sign on the line.
Yeah, no, I think that's fantastic. And even when I talked to my agent 6 months ago, he thought all I cared about was the price, and I was telling him, no, I actually I do care about the coverage.
Yeah.
And he
Yeah.
said, okay, he just needed to establish that with me that I didn't care just about the price. And I think that's really the takeaway for our pilots is sometimes it's really good to know what you're buying, because if you buy the cheapest, you probably don't have you have the minimal amount of insurance. So
Yeah.
I think that's excellent. And houses are huge assets for our clients. So over to auto here. Any thoughts around auto? I know there's no fault states like you said. I don't even know what Tennessee is. I forgot. But what are the differences around the states as far as auto insurance goes?
Similar to what I just said with the homes, the only thing different would be you're either going to have a no fault state or not. Really is the biggest thing in the auto. The variables inside a state will be how many people are in that state that don't have insurance or they're underinsured. So currently, like in Tennessee, 35 to 40% of all drivers on the road either don't have insurance or they have minimum state requirements. Knowing what kind of state you're going to and being aware of what you're going to is vital. If you're insured properly, those things don't really apply because
Right.
it's you're doing everything you can to prepare for what you might run into.
Right.
And that's kind of where you start rolling into the umbrella issue. You want to make sure you have maximum underlying limits and you layer it with an umbrella policy. And if you can get a carrier that offers those max limits for non-insured or underinsured coverage, that allows you the freedom to know if your kid's out there running around in a car and they're in a wreck and they get hit by somebody else and they got to go to the hospital, you're not writing a big check for a hospital bill.
Let's go after that a little bit more with setting the scenario. So this is the scenario that we see all the time. I've been through it personally. I think you've been through it. Your kids are born, they're little, and then all of a sudden they're driving. And
Yeah.
then when they're driving, you're like scared when they first leave and you're just afraid and all this stuff. And then you hear a story about someone getting sued because their child got into an accident. And one of the doctors in town says, I just got sued. And you're like, really? And they're like, yeah, I wasn't even in the accident. My child was. So tell us a little bit about that kind of risk. And if you have a bad story, I guess we would say not a good story, but if you have a bad story about something like this that's happened, I do think sometimes with insurance, we do have to tell bad stories because they do happen.
Yeah. So to kind of preface it and go backwards just a little bit,
Sure.
when you're talking auto insurance follows the car, not the driver,
Okay.
which is a little bit of a misnomer to some folks.
Right.
So although nothing bad has happened, my greatest fear is I have a client who has a Sprinter van.
Okay.
And obviously, he's got a full-time job. He's not driving the Sprinter, but he's a nice guy. So he lends it to everybody. And I don't know how many times he and I have had the conversation. I can appreciate your friendship. I can appreciate how nice you are. Please quit giving that to anybody. A Sprinter van's a large vehicle, holds 8 to 10 people. If it hits anybody, it's probably going to win unless it's an 18-wheeler. But all that exposure comes back to him because the insurance follows the car. So he can give it to whoever they want to. Now, it's not that the driver won't get sued individually.
Sure.
That would happen. But as soon as they find out he's a cardiovascular surgeon, the attorney's going to go after him too. And so those are the kind of scenarios that people don't think through.
Right.
They lend somebody their car or their truck or what have you. And I'm not saying don't be a good friend and don't let somebody borrow your truck when they're trying to move their kid into college or something.
Yeah. Actually, we're
But
kind of
just being-
saying that, but that's okay.
Yeah. But understand that you've got that liability that goes with it. That's once I got into insurance 15 years ago, I told the wife, I'll never call my buddies to come over and help me move again. I'll pay the 800 to $1,000 or whatever it is to get a moving company to do it. So
Right.
the liability goes with them, not with, one of my buddies in a truck. My dresser goes flying out of the back of the truck and hits somebody. So those are the scenarios that you got to kind of think through a little bit more as you acquire assets and become wealthier. You have to take a pause and just think about what your life looks like and what you want it to continue to look like as part of just a yearly, at the end of the year, and you step back to think about your career and everything else going on, just add insurance into that and what's changed over the last year. you picked up mountain biking riding or whatever it is, kind of thinking through that. The auto, when you're looking at purchasing the vehicle, as you acquire more money and more assets, you tend to buy nicer and nicer vehicles. And I had a friend, it's actually a mutual friend, call me. His wife wanted this particular car, and he called me to ask me what it was going to cost to get it insured. And I called the dealership, and we got the VIN numbers just to run it to see what it was going to come out. And it was going to be almost $20,000 a year just to insure the car. I said, I love my wife, but I don't know if I love her that much. That's now my particular wife, there's no way she would allow me to do that on either end as soon as she found out that it cost that much. But there are some things that you're going to purchase or maybe look at that you have to take in consideration how much that's going to cost insurance wise in the purchase. It might not be the most financially savvy thing to do, but when you work really hard, sometimes you just want fun stuff and it's worth it to you.
That's right.
But you just got to know that there's their price that comes with that replacement on that particular item.
Yeah, even us financial planners, we like nice things. So it's very difficult, Cecil, that's for sure. So let's talk a little bit about this dynamic when you have someone that turns 16, 17, whatever the age is in the state where you can drive. You own the car, you buy the car for them. They're on your insurance. Your insurance goes way up. You get a little bit upset about that, but then you say, well, what happens if they do get in a car wreck? How can I mitigate the risk of that happening? We actually personally, I looked at what if my child owns the insurance and can I do that? And they said, well, they have to also own the car. And so they have to own the insurance. They have to own the car. They're a brand new driver. It's going to be outrageously expensive. So just talk through that cross check there of like thinking about you can't have your child own the car and insure it, right? That would be crazy time.
So here's the problem with that. Technically you can, but the other thing, which would be expensive.
Right.
So you could go through that process. You'd be paying that extra dollar amount for that.
Mm-hmm.
But then you'd also have to, if he lives in your house or she lives in your house, you'd have to exclude them from all the other vehicles in the house.
Yeah, that's another problem. Okay.
So if they went and jumped in that car and then they were in a wreck, then they have no insurance, and then you're going to get sued.
Yeah.
So it's really tough to carve that out while they're still living in the household,
right,
because everything attaches back to a particular resident. So and I get that all the time because some of my clients, we have multi-families living in the same households.
Sure.
And it becomes a nightmare trying to figure out who's who and where's what. And they're wanting the best price available. And they're down quoting it down the street going, well, I could just get it down here and it's not that much. I'm like, yeah, but what you don't understand is they don't own the house. And now they've got a policy and they're in there. And if you were to have an accident, there's going to be an argument between insurance companies on who or what's going to be, because it's going to look like you're lying to the carriers, because they know that you're driving the other 4 cars in the parking lot or in the driveway at some point, and you're not on the policies. So it gets a little tricky. The best way to protect yourself and the cleanest way is to max out the liability coverages on the car policy and then go over top of it with an umbrella.
Right. So let's get back to that in a second. Let's just remind our group that retirement accounts are not part of what can be taken away from you attached to a lawsuit. There's other assets that cannot be taken away from you. In Tennessee, I think the rules are it's just a little bit of your house. So maybe you'd have to sell your house. I don't know. I've never gotten a clear answer on that. But some states, your house is just totally not something that could be attached or taken away from you. What are the items that you need to be concerned about when it comes to having stuff taken away from you in a lawsuit?
That's where it gets tricky. Like you just said, it's state to state specific.
Okay.
They can attach to the house in most states. Florida, if I'm not mistaken, Florida is a state that you can't attach anything to, which is why a lot of people move to Florida and put their assets into that. But there's other risks to being in Florida, like hurricanes and stuff. So there's always that. But as far as debt wise, Florida is a state that kind of exempts the home. And I don't want to speak out of turn because I don't know where everybody lives, but it is a question to make sure that you go through and look at what those assets are. And it is state to state to state to state. And we'll be glad to review that with somebody and let them know, what that looks like. The biggest fear is them attaching to the home or to bank accounts and stuff that are not protected.
Right.
And usually when you get into high net worth folks, they've got multiple layers,
Right.
some of which are protected through the retirement stuff, but they still have some major exposure. And mostly it's going to be in the home. If you get sued, you still have the legal fees and everything else that goes along with that you want to make sure you've got some money for, especially if it's something really bad.
I know a couple of I think it was attorneys. A couple of attorneys inherited an IRA, and they decided they went out and bought like $1 million worth of stuff and then declared bankruptcy. And the judge said, not so fast. This is not actually your IRA. This was your parents' IRA, and therefore we're going to allow it to attach to that. So even sometimes it's just good to review what your assets are just to make sure. And I don't know if you've ever come across that. People are starting to inherit a ton of money in IRAs, Cecil. So I don't know if you've ever heard of that one.
I don't deal on the investment side, but it doesn't surprise me because there's quite a bit of wealth that's been accumulated in retirement accounts.
Let's talk a little bit more about come back to the umbrella again. In my simple mind, I think about like, hey, you just add up all your assets that are unprotected, and then you have to have an umbrella. And I actually picture an umbrella in my own mind that sits over those assets and protects them
Right.
from getting rained on or from getting taken away. So,
Right.
how do you figure out how much umbrella? And I know it's complicated, but how do you figure out how much umbrella coverage one needs?
Well, you pretty much came up with the simplest way of doing it. And then it comes down to what comfort level you are with risk.
Right.
Not everybody wants to cover all that. Not everybody wants to maximize what that looks like. But typically that's what we've done. We sit down, one specific client, we looked at their home, which is already paid for. We looked at their jewelry. We looked at their investments, what they had out there, and determined that if something were to happen, worst case scenario, they want the insurance to be able to pay the whole deal and it be done with. So we carry $5 million umbrella over top of all of their assets. And, that's kind of the way we looked at it. You may have a side business, if you're a physician and you own your practice, depending on how it's structured, you have to look at it as well. Most people have moved to LLCs, but that only limits the business access point.
Right.
So it's just depending on how all that's structured as well. We just sit down and literally we get to know each other really well and discuss lifestyles, assets, and then expectations.
Right.
And that's kind of the way we go about it. And then we come up with a number based off of that. That covers kind of all the bases for them. And so far, it's been the best way to handle it. Because it gives us, when you start getting that intimate about everything going on with them, and I'm fortunate, my relationships are with people that I've gotten to know really well. I like to know my clients.
Right.
So, and I have a genuine interest in them. So when we sit down, they're comfortable sitting down and sharing with me all the information that I need to know to properly advise them on what they need. And then ultimately they get to determine how much risk they want to retain. And some of them, I've got some that, hey, I'm okay with $1 million, and they've got $3 or $4 million in exposure. That's just their thought process, which is fine. They're still covered for any of the minor things that would happen. But for the cost of an umbrella, it doesn't make sense to save that. For most people, an umbrella, if they're just a normal person doing normal things, $1 million umbrella is a few $100s. A $5 million umbrella, the $5 million umbrella we wrote was $2,400 for the year.
Yeah.
But we're talking, it's overlaying 5 cars, a $3 million house, the exposure that they have. It just made sense.
Right. So we can't give advice on these videos, but I will say that it might be kind of short-sighted not to get more umbrella coverage because it's so cheap. If you have a lot of stuff, yeah. And again, we can argue about how much the umbrella should be, but it's absolutely something I think that everybody should look at. And a lot of times people don't bring it up, Cecil. That's what I found, is that insurance agents don't bring it up.
Well, that goes back to, I've lost clients, or not a client, prospective clients,
right?
Because they're so ingrained in asking about price,
right?
That when we sit down and talk, that's not my presentation. That's not my goal. Is
Sure.
Ultimately, I want it to be as affordable as possible, and we market it across multiple to make sure we're offering that. But if you tell me that these are your risks, I want to make sure all those risks are covered. Because
Right.
if you have a claim in one of those, you're going to call me and think that it's covered because that's what you thought insurance was. So we do more advising and sitting down and talking, and love to have everybody as a client, but not everybody's a fit. A lot of people are more price sensitive than they are worried about risk,
Right.
and it's not like huge dollar differences, but
Yeah.
they act like they're shopping for bananas. Like it's I don't want to pay $1.89 a pound for organic. I just want this 39-cent green one, and that's
Yeah.
that's
Yeah.
that's what they go with.
So let me talk about it. Could be a myth, could be true. If we have AI, you can put a target on my face here. I have an umbrella coverage, and I won't say how much it is, but that makes me a target now if something happens. That's the myth or the rumor. Just by having the insurance, I'm more likely to get sued. Can you talk a little bit about that?
So I don't think that's the case. I think where that comes from is you're more likely to be sued based on what you do because there's an implied value to that whatever that position is. If it be a pilot or a doctor, you're a target because the assumption is you have money.
Right.
Now, if they decide to proceed, they're going to send out notice and they're going to ask for your insurance policies and stuff like that. And they're going to go after as much as they could go after. So it might look that way on paper, but what got them to your door was not your insurance because they don't really know what you have. What got them to your door is what you do for a living. Is they're gonna look up your address and going to see what your house looks like, and if it just happened to be the day Google took a picture, you had your
Darn
Jaguar in the
Zillow.
driveway. Yeah, so they're gonna go to Google Earth and see if you got a pool and
Yeah.
what your landscaping looks like, and because it doesn't cost them anything to draft a notice and send it out, and they're just fishing. They're throwing out lures and seeing what they can get, and that's where having the correct insurance is important. Having the correct carrier is important, so that the claim process isn't brutal. So for most folks in high net worth, that's you'll there's certain carriers that you would go to,
Right.
and some have better claim history than others as far as service.
Yeah,
So
I look at it differently, Cecil, and maybe I'm looking at it wrong, but if the insurance company has 1 million, 2 million, 3 million, 5 million on the line, they're going to fight like hell. And I might not like my attorney, which would be great. You don't need to like your attorney or your oncology surgeon. I mean, those are not people you care about, but you want somebody that's going to fight to make sure you don't get taken advantage of. And the insurance company, they're with you in that. So am I thinking about that wrong? I mean,
you're not thinking that wrong at all. That's actually precisely the way you should think about it. If it's a valid claim, they're if they're handling it correctly, they're going to be in and they're going to get it settled and be gone. And if it's a valid claim and they can get it settled prior to an attorney being involved,
right,
they get it done. If it's not something that is at fault and isn't a $5 million claim, and you've got 5 million, they're not paying 5 million. If they don't think they're not paying anything, they've
right.
got in-house attorneys that are there and know the process for each state, and they will fight like hell to make sure that there's nothing paid out. You do get in the situations where it's going to cost $100,000 to fight this, and they're asking for 50, and they may settle for 25 just to get it over with. But that's not reflective on you guys or insured. That's just
Right.
the way it works in the behind the scenes.
Right, right.
That's
It's funny because I always thought that was a circular argument. Everybody hates their insurance company because their insurance company never pays. And then they say if you have umbrella coverage, you're more likely to get sued. But you're talking about the same insurance company here.
yeah.
And they're going to do what's in the best interest of, like you said, if somebody was really harmed, they are going to pay out some amount of money. And that's good. That's a good system. So the last few minutes, I'd like to talk about life insurance. Charlie and I have been doing this together for 10 years, longer separately. And we've seen clients that have lost loved ones, and we've seen the horror that goes on, not just with losing the loved one, but then the life insurance becomes really important at that moment. And so we've been talking internally, Cecil, like how much is enough for a pilot. We work with some pilots that are in their 20s, and that's now a thing, first officers with major airlines. We work with pilots that are in their 40s, 50s, 60s, and retired pilots. So how do you think about how much insurance is a good baseline? We're not going to get into whole or the rest of the types of insurance, but what's a good baseline of like how much one might want to have?
The initial thought process is you take your income, multiply it times 10, and then add $100,000 per child.
Okay.
That's just kind of a general rule of thumb. But there's a lot of factors that go into that. So when you're sitting down, it's kind of like usually when I talk to people about their personal insurance, we get into life insurance. And when you're looking at it, it's again, lifestyle, what's your risk pool? What are your risks? But really it's what is your objective with the life insurance policy? So are you wanting just something that replaces your income if something were to happen?
Right.
Are you wanting to make sure you leave money for a wedding? Are you still looking to have additional children? Are you wanting to pay for college? There's a lot of folks that set these up for legacy. So they want to donate $1 million back to their church or $1 million to their school. So they're looking through that process. So it's really about what is your goal with it. And obviously where you're at in the stage of your life is important.
Right.
If you're in your mid 20s to early 30s, you haven't even really begun to develop the family, or you might even not know where 20 years looks like.
Right.
But that 25, if you've got folks that are that young starting as pilots, that 25 to 50-year-old range is when you want to, if you're going to utilize life insurance, is when you want to make sure you get it in place. And then it comes down to how much money you have to apply to the life insurance policy. But you start with what is your goals and what do you want to accomplish with it if it's needed, and hopefully never needed. But if it's needed, what do you want to do? And then you get it in place. The second level of that is where you're at 25 or 30 might be completely different where you're at 40. So even if you get something in
Why
place,
is that important, Cecil? I think I know the answer, but why is that important?
well, you may be underinsured or you might be overinsured at that point.
Right.
So while you're still relatively healthy and young, if you're going to redo something with that policy, that would be the time to be doing it. Maybe you've been uber successful in some other outside ventures. Maybe you've decided or you reconnected with something that you want to leave a legacy to that you hadn't even thought of at 25 or 30. So you can reestablish those things. So it's a part of your financial plan, ever so often to look at those. And every year there's new types of coverages that come out that are more cost effective. People are living longer, so the scales are changing. So we can do some things maybe we couldn't, and same amount of dollars being used, but expand, like I referenced earlier, expand actually how much you would get if something ultimately were to happen.
Yeah. Well, no, that's terrific. So, Cecil, what I would ask of you is to give us all of your information about where people can find you. I especially am excited for pilots that might be moving bases, for people that have not looked at their insurance. I know I've known Cecil for a long time. He'll take the time to go over stuff with you. It's going to be more of a consultation than a sales pitch. How can people get a hold of you, and what are your socials and all that fancy stuff?
Absolutely. So you can find me at www.aceinsuranceconsultants.com. I'm in Knoxville, Tennessee. If you want to call the office, it's 865-342-7222. And since it's going to people that I know work directly with you, you can call me on my cell at 865-250-5990, 865-250-5990. I have my cell with me all the time. If I weren't able to answer, shoot me a text on it and just tell me who you are, and I'll get back to you.
Yeah, that's awesome. And did you play sports in college?
Yes, I was on the football team at UT and University of Tennessee, the original UT.
And we won't get into
The
that, but what position did you play, Cecil?
I was a tight end back in the day. It was a good time 30 plus years ago.
Yeah,
My hair's not turned white yet.
No, man. No, you're I would curse at you, but that's not appropriate.
Considering I
you still
raised
got all
twin
your hair.
girls,
Yeah.
I'm more impressed that it's still there after raising
Yeah.
twin girls.
Yeah, absolutely. Well,
But
Cecil, thanks so much for all your help today. We'll have to have you back for a part two and talk
yeah,
about insuring different things. But
absolutely. Appreciate you having me on,
yeah,
and look forward to hearing from folks.
all right. Thanks.
Thanks, buddy. Appreciate it.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only and does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from those projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.